But we're going to move on in the conversation now with our next guest here in studio, because senators got an update from banking watchdogs just yesterday on how the financial reform overhaul law would be put into action. Ben Bernanke and others said their agencies would work together to make sure no deadlines are missed and that the law prevents another financial crisis from happening. Our next guest says the upcoming elections could wind up changing the rules yet again. Jeb Mason was a Deputy Assistant Secretary at the Treasury and Policy Advisor to Hank Paulson. He's now Managing Director at Cypress Group. So if we see a significant change in Congress, the Republicans take the majority, will we see retinkering of financial reform?
They're certainly committed to, excuse me, some retinkering. I think they're going to come in to the House especially, but also the Senate, with a perceived mandate to cut spending and to end the bailouts. Now, TARP is coming to an end this Sunday already, and we're going to have the first meeting of the Financial Stability Oversight Council today, where regulators are going to be focused on implementation of Dodd-Frank. I think Republican leadership is committed to revisiting some of the, especially around Consumer Protection Bureau and their broad mandate, and I think there's a lot of concern about the possibility for the government to continue to extend its guarantee in the case of a systemically significant firm. And so I think you'll focus on those two areas.
Well, Elizabeth Warren, who's going to be, an overall advisor on Consumer Protection Bureau, if not the director, she, I think, tried to quiet some of those concerns in an op-ed she had today, where she sort of likened herself in some ways, in a funny way, to Joe Kennedy when he was asked to head up the SEC, and saying, like, don't fear me so much here. It's not just about adding regulation. It's also perhaps about removing some of the onerous regulation.
I think people tend to overemphasize the importance of one single person, first of all, and I do think that there's a legitimate concern in the financial community and among members of Congress that they've given a very broad mandate to the CFPB and very broad authorities. And I think it really matters how she interprets those authorities. I mean, if she focuses merely on disclosure and improving the ability of consumers to understand the financial products that they're purchasing, I think everyone will be really happy. If the CFPB turns its attention to limiting product features and really limiting the choices that consumers have, then I think people are going to be a lot more upset.
But let's pick it up on this theme of not necessarily departures, but new additions. Given that we have seen a changing of the guard in some ways at the White House, what is it that the business community is looking for here, perhaps as a replacement for Larry Summers, if not the Chief of Staff?
I think the White House is an opportunity to send a signal to the business community and alleviate some of the concerns about the policy that have been enacted in the first 2 years of the administration. And I think the personnel that he chooses to pick, particularly for the head of the National Economic Council, could send the right signals. I think the business community really wants to see, one, a focus on what they consider pro-business policies, keeping taxes low, keeping regulations within reasonable limits, and rushing to policy certainty and stability with financial reg reform and a whole health care reform and the other things that they enacted in the first term. That includes extending the Bush tax cuts and keeping spending in check.
Now, to talk to me about political risk, that's how we introduced you in the backdrop of you having worked for Treasury Secretary Paulson. I mean, you know the office, and you know some of the measures you've helped oversee there with TARP and the like. What's the political risk that still exists? TARP ends October 3rd, but we still got financial reform being rolled out and very much figured out with perhaps a new Congress there. What is the bottom line that the business community should be looking at as the biggest risk?
Right. Well, I think TARP came in at a time when when the global financial system was at the edge of the abyss, and it stabilized the system, and it's going to do so at a lot lower cost than a lot of people imagined at the time. But it is coming to an end, and I think it's a good thing it's coming to an end because it also introduced a lot of political uncertainty. And so now is the time where I think regulators really need to rush to policy certainty and stability to give the business community and markets an ability to clear. In terms of specific policies, I mean, today the Financial Stability Oversight Council is going to be meeting for the first time, which we touched on earlier.
And they're supposed to be highlighting who's systemically risky here.
That's right. One of the big questions that they're going to wrestle with right off the bat is who beyond the 50 or so bank holding companies of non-banks are systemically significant, and how they're going to resolve those institutions if they get into trouble, so they don't bring down the rest of the economy. And the business community is going to look to what those rules are coming. Risk retention is another really important area in the area of mortgages, securitizations for asset-backed securities generally, the Volcker rule implementation also. These are all things the business community is waiting patiently to see what the final rules are going to be so they can start to build their businesses and their planning around a stable government.
So it's figuring out how those new rules are actually going to work. But good point to end on there, Jeb, that you say at least the uncertainty of TARP has ended as that fund winds down, or at least the deployment of more capital from that fund winds down. Thank you very much for all of your time.